Is the stock market starting to figure out that the Fed may continue rate hikes in the face of positive economic news? Perhaps because both Goldman Sachs and Bank of America recently said they expect the Federal Reserve to raise interest rates 3 more times this year. Producer prices accelerated in January by the biggest margin in 7 months, while a Labor Department report showed the number of Americans filing new claims for unemployment benefits unexpectedly fell last week. So, in light of the stronger growth and resilient inflation news, Goldman is adding another 25 basis point rate hike for their June Fed forecast. This implies a peak funds rate of 5.25% to 5.5%. BofA also expects a 25 basis point hike in the Fed's June meeting, pushing BofA's estimate of the terminal rate also to the range of 5.25% to 5.5%. I'm not sure why anyone is surprised, and this is one of the reasons I'm so cautious in the current market and why I think we still may have more volatility to experience. So, let's take a look. Back here to the salt mines of the 2-year weekly chart on the volatility index, and as you can see in the upper left, the symbol is $VIX using stockcharts.com, and this has a nice dish bottoming basing here with a move on up with this lower trend line curving on up through here, but it broke down at this point here and it broke below the lower trend line, and it also broke below that 200 MA all the way down here, but it looks like it is trying to bottom and base once again and attempt a move on up. The lower portion of the chart, you can see the MACD with the fast line here in black moving closer towards a slow line in red. Looks like it wants to break up and through, so we'll perhaps see that in the next few weeks, and we'll see if this chart moves on up here and eventually challenges these tops here in this range somewhere, say 32, 34, maybe 36, in that range there. That's that top line. We'll see if we move on up. If the VIX moves on up, that means the stock market is going to move on down. So now let's go take a look at the charts. Sticking with the 2-year weekly theme, this is the spiders, the SPY, and the close on Friday was 407.26. Now, in times past, we have been watching this channel. Here is the bottom channel line moving through like that, and then the top channel line moving down through like that. As you can see, the market broke up through the 20, the 50, and this upper channel line. It broke through on the upside, but not really all that strong. It never made it to this point here, which was my next level that I needed to see it move on up if it had enough strength. It doesn't seem to have enough strength. It came to this point here, and it looks like it may be rolling over, heading on down. But once this broke this trend line and these EMAs, it actually set up another channel line. Let's put that up there, more or less like through here and then through here. Now, we're not quite up to the trend line, and actually my trend line may be a bit low. We're not quite up to that, and it looks like we're rolling over. So the weakness is showing in this channel as well. Let's go to the oscillators. Moving on down, volume is ho-hum, no big deal. Here into the MACD, you can see that this bottom and base was a little higher than this bottom and base, showing a little bit of strength, and then it did continue on showing additional strength, breaking up and through that zero line. That was good news, but it seems to be relatively tepid, at least in the charts. The slow line will come on up here pretty soon and cross through that zero line, but we may get a rollover, a turnover here, and you see that in the histogram right here. This top at that point there was slightly lower than that one, just marginally, but this one definitely is lower, and it looks like it's rolling over. Now, we only have 1 week of a rollover, so we'll have to see what happens into next week, but I do think that the probability is that that's going to roll over, which means the stock market is also going to roll over. And you see here in the price rate of change, there was a big move from there all the way up here. We had to do a downward move with some more sawtoothing, and this is just a little turn up. I don't expect it to move all that much higher. I think it's just going to sawtooth its way on down again. That is my guesstimate of the probability. Here in the relative strength, you can see that we're only at a moderate 60.25. So not very much strength in that upward move. Now we have this channel line. Let's put it through like this, and then the bottom channel line through like that. I think we're going to move sideways down here, and then perhaps bounce off of this bottom line. I don't expect a strong move down unless some negative news comes through in the next few weeks or so, but I do expect the market to sell off and head on down. And you can also see that here in the stochastics, with the fast line looking like it's turning over and wanting to cross down through that slow line right here. We're almost there, but it looks like it will probably cross on through, and that would mean the market is going to head down as well. And you can see in Williams has been showing a weakening throughout this period here. So we've got some mixed signals, but to me, I think the probability is that we continue moving on down. We just started again this rollover last week, and I think it continued this week, and I think it continues into next week. But let's keep our eye on that. It may come down. It'll have a chance to bounce off of this lower channel of this new channel line here. We'll see if that happens, or if it breaks through that, and whether or not it breaks through this previous top channel line. But we won't know for another couple of weeks. But as usual, stack the cash and be patient. And for today, that's ChewDog Charts. Thank you.